Okay, I think we are live. So I just want to say good morning, good afternoon, good evening, good day. Just depends on when you are watching this video and where you're watching from in the world. Just want to welcome you to Lyonsview Realty Financial Fridays. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. Our team provides residential, commercial for small businesses and nonprofits, and property management services. We have Lyonsview Academy, which is our educational arm, and we do pre licensing for real estate and continuing education courses. We do credit counseling, distressed homeowner solutions, and health, wealth, and wellness solutions. So I just want to thank you for joining us today. Uh, we launched Financial Fridays to help you stay current on those trends that impact your bottom line. And our goal is to provide you with resources, information, and tips to assist you in making the best financial decisions. Our commitment is to maximize your wealth building power now and in the future. So I'm really, really glad you tuned in today. Welcome, welcome, welcome. And our guests are here as a resource to you. So we want you, if you have questions, put them down in the comment section and feel free to ask any questions at any time. If we don't get back to you during the live, we will get back to you after the replay as well. So today, I am really, really excited. We have some phenomenal guests that I met. I think I've probably known the Shorts. I don't know. Has it been over 5 years? It's longer than that, I think.
About 5 to 7 years.
Yeah, yeah. And they are a phenomenal team, a phenomenal mother-son team. I like it when families are working together. But today we're going to address saving and investing, two methods of building wealth that most people use to create financial security for the future. And as I said, our guests today are a family, a mother and son team, Joyce Shorts and Troy Shorts, and they are the owners of Shorts and Associates Financial Services. The Shorts have been successfully serving clients in the tri-state area since 1993. They're both graduates of Penn State University, and they share a zest and a commitment to promoting financial security by putting their clients first. Their goal is financial literacy, right? And their objective is to teach you and their clients how to experience an easier, safer, and more enjoyable retirement. And that's something that we all need to do. So I just want to thank you for being our guests today. And if you could just tell our audience a little bit about yourself.
Okay. Thank you, Claire. Well, my name is Joyce Shorts, and I'm a retired high school teacher of business education. And before retiring, I was very fortunate to meet a gentleman who changed my life financially when I became his client. And as a client, I learned how to protect myself, my family, and my assets. I learned how to save safely and how to grow wealth for retirement with income that's exempt from the radar screen of the Internal Revenue Service. So I retired with the goal of promoting financial security for other educators. And it wasn't long before I started getting calls and notes from clients, on how their lives were transformed by the new way of thinking about money. And they wanted to share with their friends and colleagues. So as you said, as business continued to grow in 1993, I became full-time and recruited my son, Troy, and we partnered to establish Shorts and Associates Financial Services. Now, as a young man, Troy coming into the business, he truly found his niche, and he brings so much to the table. And we currently serve over 2,000 clients in the tri-state area, and we help them to accomplish what they need and want. So, together our goal is to educate clients about financial strategies to build and conserve wealth beyond their expectations. Now, as Troy continues to invest his time and efforts to educate, to inspire, and serve, it really puts our clients in a win-win situation. So we're really very happy this morning to be able to share with everyone. Thank you for having us.
Awesome. Awesome. Troy, so your mom kind of hooked you into the business.
Yeah, it was a no-brainer. What a better business partner to have.
Indeed.
I'd say that too.
I mean, we're entrepreneurs. You understand what partnership is all about.
Indeed.
And to have a partner like this that shares your philosophy, that shares your family values, it's absolutely amazing.
Indeed.
And coming off of the year 2020, we made some commitments, and we committed when this pandemic hit that we were going to look at this glass half full and not half empty. And we were going to continue our mission of financial literacy, no matter what. And believe it or not, we've had an increase in business in the worst economic times in the history of our country. I mean, come on, that
says a lot.
Yeah, and it has to do with what we call her the big dog.
Well, what I think it's really important, one, that families work together, now more than ever. And, if there were things that I know now that I knew when I was in my 20s, or when I was starting, my financial journey, it would have made my life so much more comfortable right now. And, we all know it's never too late.
Yes.
But, savings and investment is a really
important.
It's important. It's important. And when you have family members who are guiding you through that process, it's people that you love and trust, and that they're not going to steer you wrong, and they're not going to have you do anything that they wouldn't do for their family. So I think it's great that you're working together as a family team, and that you're expanding your family through your clients and the services that you provide. So what types of services does Shorts and Associates provide?
Well, I would expand on that question a little more, because most advisors are very product driven. They want to put this product to do this product to do that, this product to do this. Our firm is a little different. What we do, first of all, with our clients is we establish clarity. What do you want your money to do for you? What are your financial goals and objectives? When would you like to retire? How would you like to retire? Where would you like to retire? What kind of car are you going to be driving in retirement? What's your address going to be in retirement? We want to get this crystal clear, because if you don't know where you're going, any road will get you there.
Indeed. Indeed.
So we got to get really clear. So that's the number one objective. So once we establish what it is that we want, then we take a very close look at where you are. We want to look at debt. We want to look at cash flow. We want to look at assets. We want to look at liabilities, right? And what we do is we create efficiencies in those areas. And once we create efficiencies, it allows us to literally build a bridge from where you are right now to where you want to be. So we're like engineers. So we engineer a plan. So if you go over a bridge, when they build bridges, they build in something called redundancy, right? That means if the wind blows 100 miles an hour, that bridge has to stand up, right? Well, what's the difference with your financial plan?
Right.
Right? Because the winds are blowing. They're blowing right now.
Yes, they are. Yes, they are. And people are being challenged because some people have lost jobs. Some people have had reduction of income. Some people, have been moved around and are doing work differently than they did before. Some people are actually experiencing an increase in money because they're saving, because they don't have to, pay for gas and travel and clothes, and they got a higher food bill, but
That's
So
for sure.
everybody's life has changed this past year. And I think, looking at financial planning and the services that you provide are very, very important in terms of how people are saving and also how they're investing their money.
Yeah.
So, why? Well, what are some of the reasons that you would say someone should save money?
Well, there's a lot of obstacles out there. There's a lot of people competing for your dollar. And when people retire, I like to call that halftime.
Mm-hmm.
And a lot of us are planning or been taught to plan for this peak, this time and space where, okay, I've done all the savings I'm going to do. Now I'm going to stop. But that's a problem because it's like you're going in the locker room at halftime and you're not coming back out. Well, the other teams, they're showing up, right? So you have to understand that it's about what my money's going to do for me. How's my money going to last me? And who's my competition? Well, number one is inflation, right? We got longevity. Aren't people living longer than they've ever lived?
Mm-hmm.
Well, is your plan set up so that, guess what? I'm not going to run out of money, right? How about income taxes? I mean, do you believe income taxes will be higher in the future? Just yes or no?
Yeah. Yes.
Yeah, I do too.
Yeah.
Right. So are you in a situation where your money is away from the radar screen of the Internal Revenue Service, or is all your assets going to be taxable, and you're just at the mercy of whatever the tax rate's going to be in the future? How's that going to affect your plan? How's that going to affect your address, your car you drive, the lifestyle you live, the time you spend with your family? You see, that's all real stuff.
Mm-hmm.
So you got to make sure you have not just a plan, but you got to have a strong plan because we're living in tough times. You got to have a tough plan. You can't have a Mickey Mouse plan. You got to have something strong and tough, or else you're gonna lose.
Yeah. Well, it sounds like you're talking about the investment side, the investment for the future. So folks need to save money. Rhonda was saying that she's one of our viewers. She's saying that she's received several insurance rebates in this time frame. So when you take that money, you're saving it. What are you saving it for, and when do you switch from like saving to investing it? Because saving,
okay. Great question.
You know what I'm saying?
Great
like
question.
People want to know the difference between if I've got $50 saved, what should that money be used for, and then like when should I take my savings money and invest it?
Listen, this is a very, very important question. Listen, I've been 26 years in the business, and we live in the richest country in the world.
Yes.
We have the least amount of financial literacy in the world.
Yes.
The least amount. Mm-hmm. I talk to people who don't understand the difference between being a saver and an investor. If you don't understand anything else I say today, this is some meat on the bone.
Okay.
When you are an investor, you have money that you're willing to lose.
Okay.
When you are a saver, these dollars are leverage.
Okay.
Leverage against a sickness, an injury, leverage against a layoff. You see, traditionally, financial planners say you need to have 6 months of your monthly bills in savings. Savings, meaning that it's backed up by FDIC, insured, right? Savings.
Okay.
And with some of our clients, we talk about 12 to 18 months. But you should not be investing unless you have adequate savings. Okay. You can't put the cart before the horse. And I see this every single day. Everybody wants to be this savvy investor and making 12% return on their money, but they have nothing backing it up. Mm-hmm. So here's how we're different. I love investing too, but I want to give you a permission slip to do it. Yeah. Right? Because you got to take care of home base first.
Yes.
How many times have you seen where people had to go back to their 401k to take a loan out because of some economic situation that occurred? Right? When you take the money out, you've killed the biggest economic principle, which is compound interest. When you take that money out, you cut that principle. You killed it. Right? So if you had 12 or 18 months of savings, guess what? That doesn't happen. That curve continues to grow, and grow. And that's really what you wanted it for. Yeah. Right? And then you got to pay fees, you got to pay taxes. It's a mess. And they say, oh, well, you can repay the loan. No problem. We put the money back, right? Okay, yeah, okay. But what they don't explain is when you repay the loan, the repayment is after tax.
Yeah.
And then you put it back into an account that's going to grow and grow and grow, and it's going to be taxed again at retirement. So you creates a double taxation. Yeah. Is that efficient? Is that efficient use of your money?
No.
Does that sound like it's efficient? No, it's not efficient.
No. Yeah.
We have the worst amount of financial literacy in our country.
Yes, indeed. I heard you say a couple of things. One, I really, really like, which is savings is a leverage. You know, it's it allows you to leverage against things that might happen in the future. So you're saving for those emergencies. You know, you're saving to be able to cover if you have a breakdown, because we have breakdowns of vehicles. I had a client, their heater went out. You know, there's different ways to save or to protect your savings too, I guess. But just for those emergencies, and I heard you say 6 months of, you know, expenses basically. But 18, if you can save for up to 18 months, then that's a good place to be as well. And then once you get to that 6 month of savings or that 18 months of savings, then you can think about investing.
Exactly.
Yeah, because some people, like you said, want to put the cart before the horse.
Yeah. And they have nothing.
It's like gambling too, because you're like, oh, let me put this money here and get a big return, and then that'll be my savings.
Yeah. Let me go back to that word leverage.
Yes.
Most business people are very familiar with something called an LLC. Mm-hmm. Right? When you get a business, everybody's like, we gotta get an LLC, you know.
Yeah.
Well, we create LLC accounts, but our LLC stands for something different. It's called leverage, liquidity, and control.
Okay.
It's different. So we create LLCs in your portfolio. There's always going to be a time when you need money, especially if you're a business owner. Well, what if I can keep my money growing and borrow somebody else's money? That's leverage. Mm-hmm. We can systematically set that up. So if your thing is real estate and that's what you love to do, I'm going to show you how to do it better. Mm-hmm. If you like buying houses, flipping them, fixing them, flipping them, great. I'm going to show you how to do it better. If you're one of those crypto coin folks and you love Bitcoin and you love all that stuff, hey, God bless you. Let me teach you a way to do it better.
Yeah.
When you have leverage, liquidity, and control, that's what we all want with our wealth. We'll show you how to do it. If you're open for a conversation, just call me. I can talk to you about how that works.
I like that. Leverage, liquidity, and control. And another leverage is insurance. I was just thinking about the person with the heater. So I set them up with a warranty. And so the warranty covered, that item. So they didn't have, they had to come up with the premium, but they didn't have to come up with the cost of the heater. That's another way of leveraging your savings or leveraging. Would you consider insurance an investment or a savings tool?
That's really complicated because there's a lot of different types of insurances.
Gotcha.
You know, from a 30,000-foot view, it really depends.
Indeed. Okay. Fair enough.
But, you know, insurance is something that has to be tailor-made.
Yeah.
There's no one size fits all. Everybody's goals are different. Time horizons are different. Family responsibilities are different. Debt is different. So when you're talking about insurance, that stuff has to be tailor-made because, you know, we have some of these financial gurus out here that make these blanket statements and they say, this is no good, or this is bad, or you need to do this. Or no, that's wrong. You have to, you know, when you go to the hospital, you go to the doctors and you say your stomach hurts. Well, they're not going to just rush you into surgery and say, we're going to cut your stomach open. You gotta take an x-ray first, right? Because that's malpractice. You go to jail for that.
Indeed.
Well, it's the same with us with financial planning. You got to take an x-ray. You got to find out, hey, what's really going on? How are you set up? What's your cash flow like? What's your debt like? You know, so it's tailor-made. Yeah.
Indeed. So real estate, like you said, is one type of investment. What are other types of investments that people can do? Like just category wise, not, you know, specifics, but the categories of investments.
We really look at things, like I said, on an individual basis, but I would say there's some things that we want to do for short term. And there's also things that we want to do for long term. There are certain pieces that you want to have in your puzzle where it gives you the affordability to take some risk because you have that backup. So we want to think more on a macroeconomic scale as opposed to a microeconomic scale. I hope I'm answering that question.
Well, I think what the question was like categories. You know, real estate is an investment category. Insurance is an investment category.
Yes,
Stocks are an investment category, like that.
Yes. Yeah, all of that. I love it. Here's something that I want to add. You are your biggest asset.
Indeed.
Right?
Yes.
The way you think, the way you plan, the way you prepare, the seeds that you sow in your business, the seeds that you sow in your life can catapult you to being a millionaire or billionaire, all by this little thing right here. Some of us think our biggest asset is our house, our car, or whatever, our 401k.
Yeah.
Don't forget about this. This asset, you know, I've read some amazing books. One of the books that I think is the best business book in the entire world ever written is Think and Grow Rich by Napoleon Hill.
Yeah, it's a good book.
Listen, I've met people that have read this book 100 times. And this message ingrained in their lives changed their world. And it's because it's changed the way they think. And these people are, I wouldn't say multimillionaires, but they're very wealthy. We are our biggest asset.
Indeed.
I mean, I can't say that loud enough.
Indeed. We had a speaker on one of the other shows who talked about just that, you know, the people asset in any organization is the most important asset. And I've spoken about it as well, that you know, are the most important person on your power team.
Yes.
So when people are looking at their investment team, you know, who should folks have on their investment team? What does that look like?
Wow, that's awesome. Awesome question. Listen, it's all about teamwork because that's what makes the dream work, right? So if you can think of like a rope, right, where you got like 3 ropes together, right? And they are so tight, like they can never, ever be broken, right? So you got an accountant, you've got an attorney, you got a financial advisor, right? That's the rope. It's the three strings. Like, it's strong. It's super duper strong. And they all have to know each other.
Right.
They got to know each other.
Yeah.
They got to be on the same wavelength because they're working for us. Listen, I have relationships with accountants. I have relationships with attorneys. And, you know, I have these folks coming on my podcast discussing the rope. We're talking together like we're working for our clients. And when that cord is tight, it's just, you can't lose. You just absolutely can't lose. And the other thing is that another person on there is your partner. Your partner could be your husband, could be your wife, could be your business partner, right? So that's actually the fourth, you know, part of that rope. So, you know, that's the accountability piece.
Yeah. Or your board of directors. And
yeah.
as well, if you're a nonprofit, or, you know, your board is very strong in your business, which brings me to another question. Is there a different strategy for investment for businesses versus individuals?
Oh, I would say absolutely. Here's why. Business owners have way more to risk. You know, without the risk, there's no reward, right? The guy who owns the company has to protect his team. He has to protect his investment in the business. And at the very end of the day, he has to be able to transfer that business to the next generation. So there's a lot involved there. Most business owners are so busy doing their business, they never take the time to make sure their key employees are set up correctly. They don't take the time to make sure that they're saving properly for themselves. And they ultimately don't take the time to create a succession plan, whether it's with their family or whether it's with their partner. And these are things that we help our business clients with at Shorts and Associates every single day. I actually have a podcast, and the podcast is called Attention Business Owners. And it's an amazing podcast because it really just explains it to business owners. Here's what you need to do. 1, 2, 3, A, B, C. And I'm open for a conversation if anybody wants to talk about that.
So I put your different podcasts in the chat. There were two. One is Attention Business Owners, and those are for businesses who are looking for some financial planning strategy and assistance. And then the other one is Wealth Strategies to Value. Talk a little bit about that podcast.
Okay, great. So the name of our podcast is Wealth Strategies to Value. You can access that on any platform that has podcasts. I would prefer you just go to the website. It's right there, www.shortsandassociates.com. And then you can just toggle and then click on the podcasts that are listed on there. So I'm real excited because we have some of the top financial professionals in the entire country that we've interviewed on our podcast. And I'd say the first quarter of 2021, I have it booked out with just some amazing information. And again, it's all based around financial literacy. You don't have to do business with me, but you're going to find information on it that's going to help you. If you're already working with somebody, great. It's just a resource. And, you know, it's state of the art. It's cutting edge. It's no fluff. It's just the truth. So we're enjoying it. We're really enjoying getting this message out because it's just needed.
Indeed. So person has done their savings at 6 months, 12 to 18 months. They've looked at to make sure they have the that emergency fund set up. Now they're ready to invest. What's the minimum amount of money? Like some people might say, oh, I don't have enough money to be able to invest in anything. What, kind of what's the range of funds that people might need to start, looking at investments?
$1 million. No, I'm just kidding.
Got jokes.
$1 million, I can't help. Sorry. No.
Although $1 million is good for those who have it, but
I would say one of the things that we've been doing a ton of lately is Roth IRAs.
Mm-hmm.
I'm not sure if people understand what they are, why they're different, but these are accounts that grow tax deferred, and you can pull money out tax free. Okay. So the minimum is only $6,000 a year.
Okay.
So I have people who are. Matter of fact, we just worked with a 21-year-old young lady in college.
Yes.
She set up a Roth IRA. She stroked the check for $2,000, like nothing.
Yes.
And I'm like, wait a minute, you're in college. You're working part-time and you play softball, and you have $2,000 to invest in a Roth IRA for your future. Yeah. I'm like, who's your mom? I need to talk to her. Who's your dad? Amazing.
Wonderful.
Amazing. Yeah. So you can start as low as $6,000 a year is the max. So you could do $50 a month.
Okay.
And just let it grow. But the max is $6,000. So
for Roth.
Yeah, for Roth. So those are pretty, starter plans. Yeah. see how we said it at the same time? Starter plan.
Yes. Yeah. Well, people have to start somewhere, and they have to know that it's affordable. Some people might say, oh, $6,000. I don't have $6,000, but they don't need the entire $6,000 up front. No. They can do, a monthly pay into some vehicle, right? Whatever that is, right?
That's funny, Howie.
So Rhonda says, are you giving out $1 million?
Yeah. Tell her, how does she spell her name? We'll make that check payable to Rhonda what?
Indeed. And I'm
It'll be on her checkbook, by the way, not by
since we're being recorded, I'll take that. That was a joke. Okay. Indeed. So, and then how do, in general, financial planners get compensated?
That's a good question.
Great question. Well, in a lot of different ways. So, depending on, what we're proposing for you or where you're putting your dollars, it's a good deal because we've set ourselves up as true entrepreneurs. So we don't work specifically for any particular financial institution. We are like subcontractors. So when our client invests money with Shorts and Associates, we will put that money with a particular firm, a particular company. That company pays us. So the earnings that you make as a client are not minus my commission,
right? My
fee. The companies have all the money. So I'd much rather get paid by them than you.
Indeed.
So it's very, very, it's good for you as a customer and it's good for me as a representative.
Okay.
And the other way we get paid is by word of mouth, by referrals. We've been in the business 26 years and we haven't really ever had a marketing budget where, we don't have billboards. We deal with families and, we deal with one and then mom, dad, son, cousin, business partner. That's just the way it's grown over 26 years. So, we want to have quality, not quantity. Yeah. So when we meet, it's an interview. You're interviewing me, I'm interviewing you. You have the right to not do business with me. I have the right to not do business with you.
Indeed.
You're still getting great information no matter.
If I hear you correctly, there's like no upfront out-of-pocket expenses except for what they're putting into the investments that they decide to go with, or is that accurate, or
Well,
are there
yeah,
other?
there's one criteria.
Okay.
It's called love.
Oh.
You got to bring some love to the table.
Oh, indeed.
That's it. Love is free.
Love is free. Indeed. Indeed. Well, this has been really really awesome. So if you are listening and you have any questions, you can put them in the comment section, and I'll be able to see that. But a couple of things: leveraging liquidity and control. Taking that money that you saved either from not having to do gas, which for me that's a lot of money, but I'm still working, so I still have a gas bill. But the funds that you save, you can take that money and once you've done your initial emergency budget, you've saved 6 months worth of expenses, then you can look at starting to invest additional money, and you can start out as little as $50 a month towards a plan, and that plan would be put together by your team, which would be your financial planner. You can reach out to Shorts and Associates, but you want to have on your team, I heard, an attorney, an accountant, and a financial planner. That's the rope.
Yeah, that's the rope, and it's tight. Listen, if anyone out there needs assistance with an accountant or an attorney, call me, because we have them on speed dial. Okay. And you can interview these folks, and you pick the one you like the best, and we're all talking the same language.
Okay. Yeah. So do you have any upcoming events, promotions, or any other information that you want to share before we wrap?
No, I would say I would just like to promote my podcast, because it's really about financial literacy and getting your IQ, your financial IQ up. And we've made this a mission, and we're dedicated to it. And I believe we're bringing the best information on the planet through our podcast. So I just want to promote that, because we need it, and I meet people who have very strong opinions about money. Mm-hmm. And sometimes those opinions are not correct. It's just the way it is. We are listening to people who sometimes don't have our best interest at heart. And some of the things that people think are true are totally incorrect. Mm-hmm. And I sometimes have to be the bearer of that news. But it's in love.
Indeed.
So I told you that 2021 is the year of commitment. Mm-hmm. And you got to make a commitment. You got to make a decision. You got to stick to it. You got to set up a plan. You got to execute it. Mm-hmm. No more kicking the tires. No more thinking about it. Maybe one day I might. No, this is the year of commitment. You got to make a decision. You got to commit to the process of changing. Right?
Indeed. Yeah. And that LLC, that leverage, liquidity, and control, or we could say the last C is for commitment.
Oh, LLCC.
LLCC. There you go. That commitment allows people to have to invest in their future, because that's what we're talking about. We're talking about being able to invest in a future where you can continue your lifestyle as it is now, that you can continue to have, or you can plan for a future that has the things in it that you would like for that future, whether it be your housing, your car, your lifestyle. And investment allows you to do all of that based on, what I've heard you say today. And there's a way to plan for that, to invest your money, to invest your savings, in a way to achieve the goals that you want for your future. Yeah. So I just want to thank you both for being here today. How can people get a hold of you? I see your website there. How can folks who are interested in reaching out to you, how do they reach you?
Well, we are doing 99% of our meetings are virtual at this point. And my office is located in Mount Laurel, New Jersey. My office number is area code 856-642-4074. Someone will always answer the phone there. Our website is www.shortsandassociates.com. And if you're open for a conversation, we are. Doesn't cost you anything, but I'm just excited to share this information. I'm excited that Clara thought of us today. I just want to thank you, Clara, because you're a beautiful person. And I also want to say on the air that what you're doing is phenomenal.
Yeah.
And I applaud you for finding this space, because I'm sure you are helping people more than you probably realize.
Wow. Okay.
I believe it. I mean, you're helping people, you're touching people that, that could be across the world, So I want to encourage you, and I want you to continue to keep up the good work.
And keep us in mind.
Yeah. And, no matter what comes your way, make a commitment.
Indeed.
And one thing I like to add in closing is that, we as a people, we need to learn how wealth, not money, really works.
Yeah. It's a difference.
That's a good one, Miss Joyce. How wealth works, not money.
Yeah, how wealth works. Yeah.
Right.
Yeah. Do you want to take a minute and just give me your perspective of the difference between wealth and money?
I'm sorry, between what?
Wealth and money.
The difference between wealth and money.
That's what you would learn.
Oh, yeah. Well, that's what you learn when you come to Shorts and Associates. Yeah. So we get into that very in depth, and a lot of it goes back to what I talked about with leverage, liquidity, and control. That's how wealth works.
Yeah.
Okay. So we'll get into it specifically, but that's the key. Money can be eroded.
Yeah.
Right? Money can be lost through fees, through taxes, through market risk. Money can be lost, but wealth grows. Wealth is set up to compound and grow and grow and grow. Do this. Wealth is not set up to do this, right? Money does that, right?
Gotcha.
Wealth does this.
Yeah.
Gotcha. Okay. Thank you.
Yeah,
that's a good image.
Yeah.
That's a good image, and that's a great point to end on. So, reach out to Troy and Miss Joyce and Shorts and Associates, a phenomenal team of financial planners who can assist you in taking your money, your savings, investing it, and building your wealth. Okay. So I'm excited that they were able to join us today. Our guests are here as a resource to you. So definitely reach out. I want to thank those of you who watched today live. And if you're watching the replay, you can still put any questions that you might have in the comment section. To remember to like and subscribe to the channel. And if you have any suggestions for future topics, you can put those in the comment section as well. I just want to thank you again for watching today. Financial Fridays is here to provide you with resources, information, and tips on those trends that impact your bottom line. And we hope that you have received something of value today. As always, I want to send love, light, and prayers out to anyone who has lost a loved one, anyone who has someone in the hospital and cannot see them for whatever reason they're in the hospital, anyone who is experiencing the impact of physical distancing, and just a shout out to our essential employees who are going to work providing much needed services, our healthcare workers, transportation, food, police, fire, and protection, and especially our leadership. I just want to encourage everyone, take care of yourself, take care of your family, and stay safe. My name is Clara Lyons-DeVaughn. Financial Friday streams live on Facebook and YouTube on Fridays, 9:30 Eastern Standard Time. So you can watch us anytime or watch the replay. But until then, keep living your best life. Thank you so much, Shorts family.
Bye.
Appreciate you.